Good evening and welcome back to the Australian Stock Market Show. My quote for tonight comes from author of the book The New Common Denominator of Success, Albert E.N. Gray, who said, "The secret of success of every man who has ever been successful lies in the fact that he formed the habit of doing things that failures don't like to do." So let me ask you, what habits have you formed that others don't do each week? Dale and I, in our upfront no BS approach to all things stock market, share with you many habits that you can form to ensure your success in the market. We have another great show for you tonight, so get yourself ready. For our main topic, we investigate how you can identify the direction of a stock or market fast. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. Good evening.
Happy Easter.
It's gone.
Are you allowed to say Happy Easter, or is that too politically
You're too late.
Incorrect? Oh, incorrect. Okay.
You could have said last week, Happy Easter for this weekend.
But are you allowed to say that, or you just say Happy Holidays nowadays?
I think you can say whatever you like.
Oh, okay, I get my hand slapped anyway. It doesn't make any difference. So I had a great weekend. I was down in Geelong, down at Torquay.
Lovely.
Bells Beach Easter Classic on, surfers everywhere. Good fun.
Wow.
And absolutely amazing weather. What did you do?
You were a bit of a skeg in your early days,
I
weren't you?
was thinking while I was down there, because the Bells Beach Classic was on, the biggest waves ever at Bells Beach Easter Classic was 1981, where they had 5 metre waves. I was surfing that morning around the corner.
Really?
And played footy that afternoon, and I got cramps because I was tired.
Okay.
It was already 3 or 4 metres when I was surfing it, and it didn't work too well.
Great.
Anyway, well, let's get on. Now, before we get into our first segment for tonight, again, we'll take some live calls on the show. So if you want to chat to Janine and I and ask us a question, then this is your opportunity to pick up your phone and call us now. The number you need to dial is 0392909988. That's 0392909988. Now, to get things started, the first person to call into the show right now will get a free copy of my latest book, Accelerate Your Wealth. Now, I know both Janine and I are super keen to chat to you, and I know you've got some fabulous questions to ask us, so get dialing now.
While we wait for you to call, it is the third Tuesday in the month, and this means that Dale and I will give you our thoughts on world stock markets. So let's get into the charts.
Okay, now Janine, on the screen we've got the all the world indices, if I can say that correctly.
Yep.
All the world indices, and that's for the month, isn't it?
Now, you were playing around with that, weren't you? Because you've covered up the percentages.
Look, we're
Did I tell you
30
not to
seconds into
touch?
the show and I'm getting into trouble already.
Okay.
Sorry, how about we look at the yearly one first?
Oh, gee.
But you can look at the monthly one if you like.
Okay.
It's your choice.
Here we go.
It's a democratic dictatorship here.
So the Straits Times Industrial Index is the leader at the moment, up 5.51% so far for the year. The FTSE's not far behind that, 3%, 3.14%. And then we've dropped right back to 1%, but the Australian market is third on the leaders board.
We're in the
so
green.
that's really good for most stocks that make a big difference to our market. Then we've got the All Ordinaries Index, which is up 0.55%, all in the green. Nice to see that we're holding those two spots. And then down from that, look at the sea of red we've got.
Wow.
It goes India. Then we've got the Dow Jones down 5.26% so far. Further afield than that, we've got Tokyo 1000 index down 6.68 and the Nikkei down 7.9. We come all the way down to the Hang Seng index, which is looking
China.
really interesting at the moment, down 8.47%. Further down than that, we can see the Shanghai Composite down 12.43%. The Nasdaq 100 though, and the Nasdaq Composite are actually the biggest losers, down 15.
That's because of those big tech stocks that fell quite heavily from there. And obviously that's why the S&P 500 is down quite heavily, or more heavily than the Dow Jones. But and interestingly, with the Shanghai Composite, there was a bit of a tech meltdown in China too.
Right. So, but like, what do you make of that so far?
Look, it's just a changing of the world, isn't it? Really, because we were slower. You know, we weren't as bullish as what the US was. Now we're more bullish than the US, and so our momentum has moved around the world. So I think it's it's looking good for Asian markets. I think the US has sort of had its big time in the sun for a little while, and we're playing catch up.
Okay, but do you think this period of decline on US markets, some of the Asian markets, is going to mean that there's a turnaround?
Look, I think there will be. I think, they're going to see a bit of a pullback, not a pullback, but a return to a bit more bullishness on all those markets for the second half of this year. But I don't think the Nasdaq is really going to get back into positive territory. But it may. I think the S&P will probably end up back in positive territory, but maybe not double-digit positive
because
territory.
that's a long way to go.
That's a long way for it to go. I am a bit more positive in the Dow being in that sort of high single digits. I think there's some really good stocks there that have been held back a little bit. It was held back over the last few years. The S&P 500 has been the bigger winner.
Okay.
I think the Dow's going to outperform the S&P 500.
Cool. All right.
And I think our market will do really well.
Yep, wonderful. All right, well, looking at that, shall we go to the month just to have a look? I suppose that's going to be a bit boring now that we've talked about the year.
Well, I'm sorry.
So you really blew my thunder out of the water, didn't you?
Well, I'm just challenging you to come up with something new and exciting.
Okay, so the FTSE obviously
Doing well.
is leading for the month, which is nice to see, up 0.134%. There could be some really interesting things happening in the UK market, so keep an eye on that. Then coming down right here, we can see the All Ords and the S&P 200 up. So we're on the green section of the board there for the Australian market, still for the month.
Yep.
The Dow Jones down 0.77% so far. It's really just been trading sideways though. So it really doesn't mean anything.
No, it doesn't really mean anything. It hasn't
That's
really
why
been
you
doing
wanted
much.
me to go to the yearly, didn't you?
Correct. See, there's method in my madness.
Okay, so does that mean I can finish now then?
You can do whatever you like. You're in charge. You've got the mouse.
I led you right into that. Okay, so coming down, we can see the Shanghai comp down 1.74%, then the Hang Seng index down 2.18%. If we jump right down, we can see the Nikkei stock average down there, minus 3.67%.
Yep, still a bit weak.
And we've still got the Nasdaq and the Nasdaq 100 composite down. It's minus 6% for the month. That is a big fall, isn't it, for the month?
Well, it is a huge fall for the month, and it just shows you there's the tech sector has come off the nose a little bit, if that makes sense. It's on the nose a bit. It's sort of like fish and visitors. It stinks after 3 days. So,
Okay.
Haven't you heard that? Okay,
Yeah,
fine. You haven't heard that one before. But yeah, I think the Nasdaq comp and those tech stocks, they're not really going to have the big run this year. Because everything that runs eventually is going to stop running, and I think we've had a few years of tech stocks booming, and I think there's a whole shift in the technology industry at the moment, right across the world. And I think there's a new version of tech coming through, which could be all about blockchain, etc., etc. But I think old tech, if I can say old tech, is come off a little bit, and I don't think it's going to be as good. But I want to show people before we finish up. I want to go in, because people see this little bit of a graph on the side here pretty much every week, and nobody's ever said, "Hey, Dale, what is that graph on the side?"
Why don't you just let it expand it to cover the whole
Well, I will,
thing?
but I was just saying, why don't people say, "Hey, Dale, what's that graph on the right-hand side?" Okay. I won't explain it too much, but it's called a relative rotation graph, because you can see that right up the top on here. But it's basically about momentum and volatility. That's what it's about, and it's about momentum and volatility as in comparison to an underlying. So if you see this little dot there right in the middle, that's the S&P 500. So that's the centre part of this quadrant that we've got between the green, the yellow, the pink and the blue, if you can see the same colours as me. So it's showing you how all of these major markets are moving in relation to the S&P 500. So whilst the S&P 500 was leading a lot of the markets last year, it's now what we're seeing is this market here, which is India, is outperforming the S&P 500. So it's actually moving faster. Its momentum is higher and its volatility is higher. And the further out on this it goes, these axes it goes, the higher the volatility. But you can see here's the Dow Jones here. So it's been in this area here, which is really what they call a lagging area. And what happens is they go around in a clockwise motion. So if I go and drag this, you can see here, you can see they move around a lot. So what's happening right now is you're seeing these markets here all moving up faster, and they'll move into the greens, and they'll move faster in momentum and volatility than the S&P 500. So I'm quite confident that FTSE and the Australian market and a few of these other markets will do much better than the US market over the coming sort of 6 months.
Fabulous. Now nobody has to ask you for, well, what is that graph on the right-hand side?
I know, and I'm disappointed they didn't ask.
Okay. That is it for our take on the world markets. Now it's time to get into our first email for the night.
All right, our first email tonight is from Brett, who says, "Hi, Janine and Dale. Looking at AGL as a possible investment for the medium to long term. What do you think is a good entry price for this, and in what year do you believe the stock price will be? In a year, what price do you think the stock price will be?" It's interesting. I've had a lot of questions on AGL. We had somebody post last week on our YouTube channel saying the last time we looked at it, we said it's probably going to fall further, and it did. But a lot of people are actually asking us about AGL now.
Yeah, I mean, look, the reality is that there's a demerger coming, and that's due to occur in the middle of the year.
Yep.
So that means we're going to take a $6 billion company and we're going to split it in two.
Okay.
So you've got to be thinking about where are those companies going to sit in our market, because that can have an influence on whether they're going to be in hot demand or not. Then you've got to look at, well, what are the two companies that you're going to end up with, and are you going to buy more of one or get rid of the other? What is worth doing? And so, and also, because to throw into the mix of these things with this stock, the interesting thing is that there have been two offers for the shares. So a company's come out and made two offers
To buy
them.
Okay.
And so I think the last offer was $8.25. Now, if a company's going to offer $8.25 and they've already made an offer prior to that was lower, it's very unlikely that they're going to come back in more than 10, maybe 15% more than that offer. And at the moment, the stock's trading probably at a slight premium to that. But I think that's probably why it hasn't really moved on from that jump that we saw a couple of weeks ago.
Yeah, he's asking. I mean, that tells you what you think of the AGL at the moment, because right now there's a lot of uncertainty. But that's just setting the scene for him. It's setting the scene for him. But he's asked what price to get into and what price is going to be in 12 months' time. Now, at the end of the day,
that's anybody's guess when there's a demerger.
Correct.
You don't know.
Correct.
Because it's a different beast now. Yeah.
Yeah, and to me, it's what price it should be bought at. And that's a whole different ball game again.
And I mean, there were a number of opportunities to buy it, but it's always a question of the upside potential and considering all other things. Now, when we buy stocks, we prefer to have something simple. As soon as there's a corporate action, we look into it and decide whether we think that it's worth pursuing or not. And I'm not saying that it's not worth pursuing with AGL, but I just think, is it worth buying now? I don't know. I just think there's limited upside at this point, given what's going on.
Well,
eventually
it's
it will
probably
settle
got limited
down.
upside right now, hasn't it?
Yeah, it'll settle down. Once the demerger happens, it'll settle down. It'll be easier to assess its potential and really understand what could come out of it. And then you've got to decide, well, which company you're going to favour more. Are you going to favour the one that's the retail company, or are you going to can't spit it out there.
Going to favour the other one.
Favour the other one, thank you.
Okay, so what you're saying is, right now, you're not saying it's not going to go up, you're just saying right now there's too many variables that could muddy all the waters.
That's right, and the question is, if someone's already offered $8.25 and the board is saying that undervalues the company, then what is it? Is it 10% more, or what is that?
Yeah, generally 10 or 15 to be pushing it, wouldn't it? Anyway, but thank you for your take on AGL. Now we've got a caller on the line, I believe. We've got Daniel there, is it?
Yep. Dale, hi Janine.
Welcome to the show. Daniel, where are you from?
I'm from Sydney. So getting a bit better weather now, which is nice.
Fantastic. I heard the weather's nice up there today.
Yeah, it is. It was nice. I work in construction, so we're productive today, which is good for a change.
Fantastic. You've got a question for us tonight?
Yep. So basically, I'm just a young investor. I'm a big fan of the show and love what you guys are doing. Newcrest Mining is a stock that's caught my attention, and I would like your thoughts and analysis.
Okay, so why are you looking at Newcrest, sorry?
Newcrest, well, because it's in the mining sector, which seems to be something that is going to perform well in this year as well. It seems like it's broken its downward trend.
Okay, you're looking at short, medium, long term?
More sort of short to medium term.
Short to medium. Any reason why?
No particular reason. It's just because the stock is a bit more volatile.
Yep, that's why I was asking.
Longer term wouldn't be something that would be basically on the stock's characteristics wouldn't be something that would go hand in hand.
Cool.
You know
All
what I
right.
mean?
Thank you, Daniel, for your question. Janine's got it up. She's nodding her head up and down, which I think means that she's ready to go. Okay. You ready to go?
I was just agreeing with everything he said. I was waiting for that point too about the time frame,
Yeah.
because it short term you would get whipped in and out of this thing really quickly. Short to medium term is a much better thing. So well done, Daniel, in assessing that side of it. I think it looks good for the short to medium term, but the thing you've got to keep in mind with Newcrest is it's a really volatile stock.
It is.
It's a hair raiser. So you can have a number of months that go up and then it just does nothing after that.
Yeah.
So it could be that you get 6 to 8 months up and it's all over. So that's what you've really got to assess looking at the longer time
We said
frame.
he's a beginner investor, so is this a stock you
It's
give
not
it-
a stock for the beginners,
Okay.
no.
So it's nice and exciting because it can run pretty hard, but then it's about making sure you can get in and get out.
Yeah,
That's
I
what
mean,
you
he's
saw.
looking for a mining stock. There are other mining stocks out there. I'm not trying to sway you away from this if you wanted to put some money into the stock, but just understand that the risk that you're taking and make sure that you've got a stop loss. And I would not have, if there's someone starting out early in the market, you wouldn't just have this one stock in your portfolio.
No.
It's taking on too
No,
much
there are so many other
risk
stocks I'd put in my portfolio before I would put this one in.
Yeah.
Especially if I was a beginner. But look, what do you think the stock's going to do over the next few weeks to months?
This is the thing with Newcrest. You don't always know what it's going to do. It can just look great and then all of a sudden turn, but it does look nice right now.
Yep.
So right now gold stocks are moving up. It's good to have an exposure in the gold area. So I think over coming months you can't really go wrong, I think, in a gold type stock.
If interest rates go up, what happens with gold?
Well, look, I mean, that can have an effect as well. I mean, people will always go to gold for defensive, because it's defensive nature. But by how much and how long, that's the question, isn't it?
Okay. Are you happy with your answer now?
Have you got anything else you'd like to say?
No, I just keep asking questions for him.
Oh, really?
Okay, yeah, because I'm the one that knows how to ask all the really good questions. No? Okay, so you like Newcrest, you think it's going to go up, but it's probably not a share that a new person should buy or an experienced person should buy.
I would say so. You've got to have a good strategy, and if you do take it, it could go up for 6 to 8 months, and that's it.
Yeah, yeah, cool. All right, well, that's it for Newcrest Mining.
All right, now our next email we received is from Aktha. Hi, I bought Core Lithium on July 21 at 22 cents and still holding. In the last few weeks, it has gone up from 72 cents to $1.68 and is due for some correction. I wanted to get out at $1.40 to $1.50, but I did not, as I was afraid if I could not buy back on time. My question is, how would you time the peak to sell and time the bottom to buy back for this kind of stock, which usually goes up 5% one day and down 5% the next? I like to hold the stock until we see the lithium supply meets the demand globally. Regards, Aktha. That's a very good strategy. So he's hanging on, and once the demand meets the supply, he's switching out.
I know, but his question is like, it's unanswerable. Because it's like, can we tell when to buy in and when to sell out? When a stock's finished rising, can we work
We
that
never
out?
know.
Yeah, we can.
We never know exactly when a stock has finished
Yeah.
rising. We just have to decide whether we want to take the money off the table based on the rules. So you can have rules to exit and decide, well, right now it's time. The rules are telling me to take some money off the table or exit completely. But looking at the I think he's had more arse than class, I was going to say, and I did say it, didn't
No,
I?
I agree with you, it is.
In terms of his buy, just looking at the chart there, and it's just trended up beautifully, but then right now it hasn't shown me on the weekly chart anyway any indication of an exit. It's just
But my question is that he's asking, can you do that? Can you know when it's going to drop away and then know when it's going to bottom out and do it? The answer is yes, you can do that.
you can know when
But-
it's likely to,
Yeah.
but not when it is. There's a
But
difference.
that means you need a lot of skill. And if he's asking the question, that implies he has very low level of skill because he doesn't know how to do that.
Yeah, that's right.
So-
So he's actually really fortunate the share's gone up.
So
but
he
it's
has
a
more
question
arse than
of-
class, basically.
But it's a question now of
Yeah.
wanting to hang on to that profit, isn't it?
Correct. So what would you do?
Well, right now, I mean, look, the nearest that you've got, if you've got no rules to manage it, the nearest that you've got is this low here, which is 20% away.
That's
So
a long
that's
way.
it's a long way. You couldn't get a trend line up there, and you need different rules to be able to manage it any other way.
I think he should use the profit and put it into our course so we could learn how to do exactly what he's asking.
Well, that's good too. I mean, he could do that. So that's Core Lithium, and I think it's a really good stock. I'd be interested to see just let us know how you did manage to get out of that one down the track. But right now it's not showing any signs of going the other way.
No,
the
I
other
like
thing
lithium too.
The other thing I like to say too is that I like to take some profit off the table if I can.
Cool.
All right, it looks like we have another caller on the line. We have Dave. Hello, Dave. How are you this evening?
Yeah, hi Janine, hi Dale, how are you?
Great, thanks. Oh, it's good to have you back again.
Yeah, no worries. No, I thought I'd ask you about Min Resources tonight. I bought into it 2 weeks ago at $55. I've got a target of around about $70 plus, and the stock's around about. I just want to get your thoughts, where you guys see it.
Okay, so did you say that you got in at 55? Is that
Yeah,
right?
I got in about 2 weeks ago at 55.
Yeah.
Yeah. I got back in at 55, so I've got back into it at 55.
Okay.
I've got a target. I'm happy to sit in for 6 months. But yeah, I'm looking for it to go to about $70. So I just wanted to get your thoughts on that.
Yep.
Today.
All right, let's go to the charts and have a look then, shall we? Dale, you've obviously picked something on the chart that you've identified there.
No. I've just put where his buy price is around $55. So he's bought on this week roughly around where that green line is now.
Now, I couldn't quite hear him, but I thought he said something about buying at 65 as well, didn't he?
No, I don't think he bought it. He bought it at 55, and he's looking for it to go, up to around $70 odd from that point of view. So I'm not sure how he's picking those prices.
I guess the question is it likely to rise from here or not? And the challenge for any stock when look at it, it's already made two highs around that $65 mark. So it might be struggling in the short term to get there. We've seen these two big rises which look great, week ending the 8th of April and the one prior to that, and then it's just done nothing last week. Obviously it's the holiday season, so that could have some influence on it.
Correct.
In terms of I think we need to go back to the long-term picture to decide really on what we think there. So I'm just going to have a look at the whole chart. It's got the potential to go higher, looking at the trend behind it and the momentum it's got, even though it's slowed down just recently. But, could it come back and take him out in the short term? That's the thing.
Well, that's a possibility because I would expect it was probably going to fall away for a couple of weeks soon anyway.
Yeah, so, I mean, from where we are right now, if it does pull back, it could pull back about 12 or 13% back below where he purchased.
So you need to have some good rules for exit on that anyway.
Definitely.
But I'm not sure right at this stage is probably going to get some resistance around that 65 as you mentioned. It may not get to his point before it pulls back.
It's done incredibly well, hasn't it, over the last couple of years since COVID? Good little stock choice.
All right, Janine, we've got another caller on the line. I believe we've got Ree on the line, have we?
You certainly have.
Welcome back, Ree. I remember you rang through the other week.
I certainly did. That's right, I did.
Well, look, I love it that you've rung us back and you want to chat to us some more. So do you have a question for us tonight?
Yes, darling. I do about on my radar doing my analysis. But, yeah, I can see it's got quite a fall there and it's hit forward. But I was, and I don't own this.
You don't own it? Okay.
I'm looking for a possible entry, which is...
Okay, I think we've lost Ree.
Now, I'm struggling here because I can't get the stock up. So do we know what the stock was? Yeah, and nothing's coming up. So I've got nothing there unless you know the full name of the stock. Did you get the name?
Okay, so we're just trying to find the name of the stock.
Magellan, is it Magellan Financial or MFG?
MFG.
Is that the right one? Yep. If it was Magellan Financial, that's what we're looking at. This is actually, if it is this stock, it's a really interesting stock, Ree, and great to hear from you again. Just looking at the chart, we have seen, maybe you can ring back and confirm that for us, Ree. We've seen this massive decline in this share, and I think, if it does find support here, there's no definite to say that it will. It's really early days yet, but we just need to...
she's not in it yet. She's done some analysis on it. She's not in it yet.
Yep.
Looking to buy.
Yeah, we need to see it go up for another couple of weeks at least, because we're seeing a little bit of consolidation at the bottom there, but it's way too early. I'd like to see it pull back into this week and possibly next week, and then make a move up from there. But even then, you would need a good rule on there. Trendline might actually do okay on this one.
It might, and you've got good volumes
point.
coming into it the last few weeks as well. Looking at that, it's really increased the last few weeks. So too early though. Very, very much too early at the moment, isn't it? Really.
It is, yep.
Yeah, so it's sad we couldn't get a bit more information out of Ree anyway, but I think we've given her enough at this point in time. But you are welcome to ring back, Ree, and talk to us again and give us a bit more clarification. But I think that's it for MFG.
All right. Our next email is from Jay. Dear Janine and Dale, your show has given me the courage to start investing. I have the following stocks in my watch list for a while now and am planning to invest some money into them. I do not have a great knowledge in reading technical charts, and it would really be helpful to know what your thoughts are on them. Sol Patterson, Ansell, Domino's, thanks and kind regards, Jay. All good in interesting stocks.
Yeah, they all are. I had to take out he put a whole lot of other stuff in. I just took all that out. But I mean, we only do one stock anyway. We're not going to do all three.
Yeah, you're meanie.
So I'm not. Oh, thank you very much. I'm not mean. My wife loves me.
I know, you're great.
Jeez.
You're kind-hearted.
And I have to give the dog food, so it loves me too. Okay. Sol Patterson's.
All right, so looking at the chart there, this is actually an example of an interesting stock that does trend at times, but then goes into these sideways moves. Look, perhaps if we just bring up the monthly chart first and have a really good look, it can do nothing for years.
Yeah.
Like some stocks on the market there, we can see that there's just no activity, and why would you even bother with a stock that is stuck in that sort of move?
Do you understand why that is?
Why? As in relation to this particular company?
Yeah.
No, why was that?
Well, mainly because it's very tightly held by the founders.
Oh, right.
So
there's
there's
no
huge
liquidity.
shareholdings by the founding groups, basically. So it doesn't have, the amount of turnover of stock isn't as large as what it would be for a BHP.
Yeah, because institutions don't like that when they've got that situation. So
Correct.
what happened here then?
I don't know. I haven't looked at it. Maybe they've loosened that up a little bit.
Yeah, because in March 2018, something really significant changed there.
Yeah, because you remember and probably another example of this is the ASX itself. When it floated, it was owned by the stockbrokers who are buy and hold.
Yeah.
That's all they tell you about. So in the early year or couple of years of the ASX, the brokers weren't trading it, so the amount of turnover was very, very small, and ASX just kept going up and up and up and up and up, and eventually the brokers retired and sold off their shares, and then it's trading fairly normally now. But Sol Patterson was one of those stocks that was quite tightly held.
I actually don't like it. In the short term, I think it's possible to make a little profit on it, but I just don't like it right now, that's all.
Okay, a bit too early. His other two stock choices were good choices for stocks as well. I know that.
Yeah, Domino's we look at from time
Domino's.
to time. I think we looked at that recently.
Yep. Yeah, so you can go back and look at some of our other shows and look at that. But thank you for that on Sol Patterson. Well, Janine, I think it's time we get into our topic for tonight now. I've been looking forward to this as it really follows on from our main topic that we did last week's show, where we talked about how common it is for people to buy at the wrong time. So tonight, we're going to share with you how to identify the direction of the stock or market fast.
You and I both know, Dale, that the most important strategy in the stock market is to trade with the trend, as this one thing makes a big difference to your success. We've all heard the common saying that the trend is your friend, and yet, as we showed you last week, so few really understand what trading with the trend really is about.
Well, Janine, it's no wonder people constantly do not get it right. After all, it's really common for many be looking at the daily or even the 4-hourly charts in attempt to determine the trend, and I think this is really, really crazy. I'm sure you do too. Now imagine trying to find your way in the dark with a blindfold on. It's just downright dangerous.
I can understand why people do it. You see, the biggest challenge that you will have when investing or trading is managing your psychology, which means not getting caught up in the hype or popular opinion. If you remember the quote at the start of the show where I mentioned that the secret of success of every man who has ever been, and woman should say, successful lies in the fact that he formed the habit of doing things that failures don't like to do. It really gets you thinking, because when you do that, what is popular, you're doing what the masses are doing, and we all know how that works out. And this really means you have to leave yourself exposed by blindly following.
So what you're actually saying, Janine, is that our viewers should not listen to what is popular, but do what's right. And this often means carving your own path of creating the habits of successful traders. Now this means that instead of daily or 4-hourly charts that can be very misleading when it comes to trends, that they should learn to focus on what the stock is actually doing. And this is where the charts of longer time frames will reveal more of the truth about many things, but which critically the direction of the stock is travelling in is the most critical part.
Yeah, correct. Learning to trust the charts and not opinion will allow you to block out the noise and interference so you can trade well. So in a minute, we'll share how you can identify the direction of a trend fast. Understanding direction's critical so you can trust your own judgment and trade like a pro.
Well, wouldn't we all like to do that? Well, sorry, wouldn't they all like to do that? Not necessarily. Yeah. So Janine, so many tell us that they trade with the trend, yet every week on this show we see evidence to the contrary. So many people still try to catch that falling knife. Now, you would think it's really simple to identify direction, but the overwhelming evidence suggests that this is not always the case.
I will say that what you see when it comes to trades depends on 3 things. Firstly, it's your level of knowledge. Second is your trading bias. And lastly, the time frame that you are observing on the charts. This is why it is so essential to create successful habits, because without proper training, you'll easily be caught up in the emotion of the market and be influenced by the short-term movements in the stock price. This means catching those falling knives that we so often see from those emails. Now, in essence, Dale, what you're saying is that to be successful, you need to make an educated judgment rather than guess, like we so often see people do, isn't it? The aim is to put the odds of success in your favour and not take on more risk than you need to. And it just makes sense. After all, how can you achieve consistent success if you haven't got the right education?
So true.
The next point I want to make, Dale, is about your trading bias influencing your decisions. Short-term movements in the stock market can have a powerful impact on people and their psychology. And this is really sad because most do not really understand what they're risking. This is not a game, and making a decision to take a punt today on a stock and pray you get it right is not the road to take.
You know what I call that? That's called the buy and pray method, Janine, of trading. Now, we know so few consider that it's very important to understand how you go about your trading. And over many years, that is what matters, not what's happening on the stock or market today. Now, we do really need to remember that everything you do today or the habits that you create every day lead you to be the trader you desire to be. So if your habits are to react to the market rather than follow the trends, then history shows us you will struggle.
Indeed, and we see that a lot. You know, Dale, if you understand and create successful habits, then you have far less time for distractions that will sway your trading and create trading bias. In some cases, people will be completely oblivious to this bias, which is really dangerous.
Yeah, well, I totally agree with you. And I think it's really important to say that if you have a bias, then what you believe through popular opinion results in you not seeing the facts for what they are, as you only look for something to confirm your beliefs. So if you believe a daily chart shows you the trend of a stock, what you'll see will confirm or validate that thought.
Yeah, it's so true. However, with the right training, you can learn to recognise what you need to focus on and ignore the noise of what's popular, as this stops you from achieving success. You will remember that last week we showed the consequences of focusing on the short-term direction without first understanding the overall trend on the charts.
Yeah, I remember that one, as I really enjoyed last week's topics.
Well, that third point I want to make tonight is about understanding the charts. What I mean here is that having the ability to use a solid process that guides you to a sound conclusion so you make better decisions that minimise risk and maximise profit.
Now, every week we get emails from people buying into falling stocks. This is really avoidable, and when we look at the charts of these stocks, we see like so many reasons not to get in, and more often than not, it's a direction that they get wrong. Now, what's worse to me is that so often they are blind to the risks that they're taking, and they often don't have a stop loss in place.
Yeah, and that's critical. It's a critical point as we ask people if they want to buy a stock that's going to fall further. No doubt they'll say, no, they wouldn't buy that stock. Rather, they want to buy a stock that's rising. So with that in mind, we are now going to show you how to recognise when stocks are rising so you can pick this fast. Remember, to determine the best times to enter is a skill and takes proper training, which we're experts at delivering. So let's get into the charts.
Can I talk about that just briefly? Because I know one of our guys talked to me today about time in the market versus time in the market, because he spoke to somebody today and they were talking about, everybody's saying you can't time the market. And I reckon that's bullshit, because we do it all the time, okay? That's what we do. That's the whole essence of what trading is about. And so you can time the market, but people tell you can't do it because they don't want you to do it, because they want you to do it. They want to do it all for you, which is the big end of town.
Right.
What we're talking about is people miss the timing all the time.
If they're buying stocks that are falling,
they're missing it all the time because they don't read the trends. So understanding the trends is what we teach in our courses. It will help them buy at the right time and minimise their risk. That's what we're really talking about here. Because
there are a lot of aspects, though, to understanding the trend. Someone might just think, just look at a chart and you can see whether it's going up. But that's not all it is.
No, true, because you get people, we had somebody saying that they were looking at monthly charts, then 4-hourly charts, and I mean, I would never do that.
Yeah.
So they're doing things that are really incongruent, and they're looking for things that they've heard and that they think are right, but they don't know, and they're in that, we call it that Dunning-Kruger effect.
Well, they're trying things. I mean, which is experimenting with their own money. But, a lot of people do it.
All right, so let's look at a chart.
All right, shall we look at the charts?
What are we going to show them?
Goodman Group as the first example.
You love that stock.
It's a very nice stock. Now, there are some really nice property stocks out there that trend well. So I guess the first thing I wanted to just get everybody thinking about was taking the bird's eye view and having a look at what the trends look like at times. So over time, if we look at Goodman, we can see at the start of the chart, it just trended beautifully. And people think, look, it's spent a lot of time falling in the GFC, but that's still indication of what it's like when it trends. That's really important to see what a stock does. It's actually far more important to see what the stock does when it falls as well, as seeing what it does when it rises. But all of this is really nice when you see the closes at the top of the bars and it's just stepping up. It's that stepping up activity, which it continues to do over time. So you can see here some really nice little trends that happen that are repeatable, and since COVID, it's done the same sort of thing, but even on a greater angle.
I'm going to ask you a question. Can you see the trend of a stock on a daily chart?
No, not a chance.
Yeah, cool.
And that's why last week's example was a really cool one. And you used to show this other one at workshops that we ran, and it used to blow people's minds away. There'd be people sitting in the audience, and all of these guys particularly, I'm not being sexist, but, these guys would put their hands up and say, I'd buy that. And in the end, when they saw where the stock was in the bigger picture, it was actually in a decline.
And that was it. I did that so many times in rooms full of traders, not necessarily, not our students, but I used to go out, and you used to do it as well.
Yeah.
When we go out and speak for groups of traders, they'd say exactly the same thing. And I'm thinking, how do you not know this? Like, it's just, to me, this is 101. Know the direction first. And even traders don't, because they all follow each other.
Yeah, I mean, the challenging thing in the stock market is the stock can look like it's going up,
but it's not.
And then reverse, even in the bigger picture time frame. So we're talking about two things here. One is the long-term direction.
So always look at the monthly chart, step number one. Always.
And then looking at the shorter term time frame, that's where it can get more tricky, because in the shorter term, you can see the market pushing, or you can and even now with automated trading and algo trading, it's probably even more prevalent, isn't it?
Correct.
With stocks being ramped up and then reversing following that.
So this is a really good trending stock.
So that's a good trending stock. Whitehaven, I'm going to switch between the monthly and the weekly on Whitehaven. So
Yeah.
this is a more volatile stock. Now, I'm not saying go for Whitehaven. You know, I don't want to bring the climate
So its
stuff
trends
into
are more
it.
medium
Just about
term
the
or shorter
trend.
term?
More medium term. So if you can see that you can get a really nice trend over the medium, even to the longer term, it looks really good. You can see that it's doing it again. And that's reliability. Even seeing the declines repeat in a similar way can tell you something. So I think from a trending perspective, that's really a classic and nice little example. We'll go to the weekly chart now and have a look there. So you can see on the weekly chart what the trend looks like on that short to medium term time frame. And it's just, once it starts stepping up, it just takes off, doesn't it?
It does.
So it trends really nicely. Now, Flight Centre had a history of doing a similar thing, although it's been a complete disaster, obviously, since COVID. But stocks often return to the way that they were trending over time. We'll see if Flight Centre does that. You can see here on the monthly chart, really nice trends, but for a certain period of time. So this could be short-term trading, could be medium-term trading that we go for. But this is what we talk about. People just pick stocks willy-nilly, but it's about understanding and learning how the stock behaves before just deciding if you're going to trade it. A bit like picking a partner, really, isn't it?
Well, yeah. Well, I mean, it is because you need to
But you
know
can't
the
trade
person.
one in for another really easily, though.
You're talking about stocks or partners now?
Partners.
Partners. No, you can't. But, you know, you try out your partner, you get to know them for a few months before you then start to go, okay, this could be something
Are you
I stay
giving
with.
me relationship advice?
No, I'm just saying that's what we normally would do. You don't just sort of marry somebody the first day you meet them,
Yep.
do you? Which is what a lot of people do with stocks. They go,
True.
oh, it's moved up, I'm going to get into it. What we like to see is a sustained movement in price. Now, I would suggest
Yeah.
anything under 3 months, movement in a direction is not confirming there's a trend there.
Well, it depends on other factors on the chart, of course.
I'm being
You know.
very general, but I'm just saying.
The other
if it-
factors could be an early indication with high probability that
correct,
the trend has
but
changed.
it's not confirming there's a trend up.
Oh, well, that's because you've got all these lovely, sexy rules to confirm a trend.
Sexy rules, okay, cool. I'm happy with that one.
I thought that would shut you up. All right. Now, we can
This
see
is a
here...
G-rated show.
Yeah. We can see here a lovely trend there on Flight Centre. Just
Yeah.
beautiful.
It does trend
Now,
well.
it doesn't... In the short term, it can just give really nice short-term opportunities to make some trades if you wanted to do that. But if you think short-term, you could be missing out on the short to medium term. Now, we talk short term is anything up to 3 months, and the medium term obviously goes from 3 months to up to 18.
Can I say something? Sorry. I was dealing with a student today, and we were working on an email answering a student who's back testing a stock, and they found that trading this stock on a monthly rules gave them far better results
Yeah.
than trading them on a tighter time frame, which
Yeah.
can happen too.
Cool.
Sometimes it's far better just to trade on a monthly chart and you'll get better returns.
That's where I remember having some guys come to us after the GFC correction, and they'd been trading up to that peak prior to the GFC and then following it down. But they realised that they needed more work in terms of being able to understand how to come up with the strategies. Once you know that there's a trending stock, how do I come up with the strategy that's going to work? So even these guys who were really experienced, 10, 20 years trading, didn't have the experience to be able to determine that from the chart. To me, that's key, and in addition to that direction.
You do need it. Because
So-
anybody can make money in a bullish market.
So there's Flight Centre. So Rio is a tricky one,
It is a lot
okay,
trickier,
because
isn't it?
it's a bit more volatile than a lot of stocks can be. Really, at the moment, it's a good short-term.
So the more
stock.
volatile do you think the further out people should look? Or
Not necessarily, because I mean, you know, trading this long-term could still give a good result, but you could lose it all if you're using rules on a monthly chart to try to get out of this stock. You know, you'd just be in it, and then all of a sudden you've got 40% profit, but then you've got nothing, 10% left at the end. But if you were using this on a short-term time frame, short to medium term, you could make some nice returns
Okay,
on it.
cool.
So that's Rio. Now, you asked me to put some more charts in.
Yep.
So I've put a couple of extra ones, and I thought this was an interesting one because CSL's very different to a lot of other stocks in that it spent a lot of its time going up. So how do you judge a stock that has spent its time going up? What's its direction at the moment?
it's down.
It's down, but it's so sideways as
It's
well.
so
It's
sideways,
just
yeah.
not giving us good direction at all, is it? And yet, if we go look at the weekly chart, and we see here, we might be able to get some indication of where it's going. What would you say about that? The short-term direction.
It's down a little bit, isn't it?
It's down, but it's really sideways in the short term.
It's not going anywhere.
It's not going anywhere. So, people are buying stocks on this direction, which is, there is no direction in it. So
Correct.
that's the point, isn't it, really? Identifying stocks that this may be a great stock and it may return to being a great stock, but why would you put your money where the odds are not in your favour, really, is the point.
To get a direction, you need disequilibrium. You need more buyers or sellers. And you need one side to be more dominant than the other. When you've got stock like this where they're equaling at the moment, which is moving sideways, you don't have direction. But all too often the sellers are more dominant and people are buying into those stocks when the sellers just pull back a little bit. And then they think, oh, it's going up, and they jump into it, which is not very correct.
I mean, I don't mind buying stocks that have pulled back because that's where opportunity can be.
I've got two sneaky things I want to share with people.
But if that stock took off, it could be a really nice short-term trade in there.
Absolutely.
That's the thing.
So you got one more stock, and then I've got two secrets I want to share with people.
Wow. All right. Okay, so Eagers Automotive was a stock that one of the guys, I think, either wrote in or emailed in.
Yeah.
One of the viewers on our show, I think one of our subscribers. And this is actually really nice as well because look at this. Month after month, we were getting all of these up moves, which is really nice to see consistent moves up for an extended period of time, which means that you can actually get some good trades out of the stock. So if we go now to the weekly chart, we can also see that it's a steady hand in terms of the way that it moves. Look at that.
It does move.
It's really nice, but the exit could be a disaster if you haven't got the right set of rules. And that's where, having multiple strategies and you're taught multiple strategies and how to actually use those well is really critical because it's not one size fits all. When you buy the T-shirt, it says one size fits all, but I'm saying a T-shirt on you and a T-shirt on me is going to look completely different.
I'm not even going to go there. I'm going to stay right out of that one. Basically, to me, what I want to share with people is finding direction is not hard in a simple form for most of these people. And I mean, obviously, we can take the education to the nth degree, which we do in our course, for people to really do it. But the easiest way people can look at direction is looking at the monthly charts. Number one, that's the first step. Number two, you can look at it in terms of how far is it moving. Just because you get a little bit of move up in price doesn't mean the trend is changing. So you need to look at it. So one of the other second things that I suggest people do is print the chart up and give it to an 8-year-old child and say, is that going up or down? Because an 8-year-old's going to look at it without the bias that we have because we naturally have a tendency to want to believe it's going up.
Yep.
We always have that. We're always erring on that side. So giving it to somebody who doesn't have a bias will tell you that's going up or that's going down. And we need to do those sorts of things. The third thing is
but I just think that could be very dangerous. Like,
why
what
an
if you've got
8-year-old might do better?
What if you've got two people who have no idea and the husband gives it to his wife to tell him?
Well, she'll be able to say that's going up or down.
Yeah. And
because she's not going to be as biased.
Isn't that going to lead to arguments?
No, not if you've got a good wife.
What if she was wrong?
Well, then you blame her.
You have to
Okay. The last thing I wanted to talk about is turning the chart upside down.
Okay.
So that's another when we actually invert the chart. I don't know if you can show them how to do that, where we can actually invert the chart in here.
Yep, just there.
There it is, invert the chart. So you turn the chart upside down and you look at it inverted. And then that will change your perception of it because you can say, okay, if I wouldn't buy into this stock, I should be selling it right now.
You're just stealing my line because I used to do this at workshops all the time.
All right, you can have it then. Have it back.
I don't want
I'm handballing it back. But that's the three things. So print up the chart and show somebody who's completely not interested, saying, is that going up or down?
Yeah.
Because it's going to get rid of that cognitive bias that you might have for wanting to trade the stock because you've heard news or whatever else. But then hold the chart up to the light and look at it upside down. Because then it might completely change your opinion on whether that stock is going up or not.
Yeah, I think that was really good to raise that.
Any other points you want to bring up?
The only thing I would say, though, is that when someone picks up your book and they're trying to put together, the trend lines, the trend lines are an early indication that the trend may have changed.
Correct.
Right, and so then it's about trying to marry this sort of thinking together, and that's where, getting that deeper understanding of how to do all of this is important. People look at things on the surface and they think, oh yeah, there's a trend line, I can draw a line, but it's never that simple and straightforward if you want to be consistent with it.
No, it's not, and that's why you need to learn.
Yeah.
what you're doing, because once you understand what you're doing, then you can get better results and everything else. But I think that's it for our topic tonight, isn't it, Janine? Okay, now before we get into our next email, I do hope you have your phone ready and have been patiently waiting for the opportunity to call into the show and ask Janine and I your most burning questions. So now's the time to get dialing. The number you need to dial is 039290 9988. That's 0392909988. So get dialing now. Janine and I are champing at the bit to talk to you.
While you call us, we'll get into answering the next email, so call now, please. I look forward to hearing from you.
All right, moving on, we have a question from Karen who says, "Hi Dale and Janine, I'm a big fan of your YouTube channel. I've been watching since 2020. You're the only stock trading show I watch, as I found your information the most informative and the least speculative. I started trading in 2020 when the market dropped and have successfully used your advice to make some good choices. However, I'm still learning, and one mistake I keep making is selling too early. For example, I had GRR and sold it when it dropped below my stop loss. However, it went on to make continued gains. Is there any way to anticipate the need to hold when a stock drops below your stop loss? Thanks, Karen." The simple answer is yes.
Yeah.
You need to do our course. We'll teach you all that.
Yeah, so, I mean, do you think that is that really important for her?
Well, you need to know when you're entering and exit, and when, big mistake is people enter too early and they exit too early quite often, or they exit at the wrong time. So they're fearful of losing their profit, so they set their stop losses too tight, or their exit strategies too tight.
Yep.
They get stopped out or they exit, and all of a sudden it turns around and goes up again. Now, you and me know how we read the chart. We know when a stock's doing nothing or going sideways, or it's not going to go down very, very far. And we could quote hundreds of examples where we've not sold stocks that have gone down for a few weeks and then taken off like a rocket. And I don't know how many times I've made 50 or 100% on a stock that's done that, because... I know you and I have challenged each other numerous times saying, well, aren't you going to sell that, or are you going to sell that? And we go, no, and you go, okay, fine.
We leave it.
We leave it because the other person's done the work. And you can do that, but it's not something we can share with you on YouTube, because there's a lot of knowledge and information that goes behind what you need to do. So the answer is yes, you can do that. It's just we're not going to teach you on YouTube. It's you have to do one of our courses to learn that sort of stuff.
It's a really nice looking little stock. Looking at
it
the
is
chart,
a great little
though,
stock.
isn't it? It looks amazing.
Yeah, you want to say anything about the stock?
No, I just think it's amazing. It hasn't given an exit strategy, but it's been going up 1, 2, 3, 4, 5 weeks straight, which it hasn't done a lot of. So I'd just be a little bit cautious right now.
Okay, cool. All right.
All right. Looks like we have another caller on the line, and it's Mac. G'day, Mac. How are you this evening? And what's your question?
My question concerns the share Horizon, AZJ.
AZJ. And look, would you tell me why you picked that particular stock?
Well, I own 5,000 of it at the moment in my superannuation. I'm wondering whether it's a good stock to hang on to, or whether I had to go for more of the shares which are in the first 50.
Right. And is that your strategy? Is that your portfolio strategy, is to focus on the top 50?
Well, that's the thing I'm getting from a certain couple of people that I'm looking at on the TV screen now.
Okay, that's very cute.
What was your buy price, Mac? What was your buy price for Horizon?
I bought them at about $3.84.
Yep.
And at the moment they're about 3 cents above that, so I'm happy.
Okay, so you bought them recently, did you?
In the last 6 months.
In the last 6 months, okay. So somewhere, okay, cool. I'm just putting a line on the chart, so there you go. Somewhere
there you go. Look, I think it looks really nice at the moment.
Sorry, we've got to say thank you, Mac.
And he's just talking about buying for his super fund and whether he should be buying stocks within the 50, whether, it's okay to have a little bit of a mix of stocks outside of that, but it's a question of him deciding how far he wants to take that.
Well, the answer to that is more about knowledge and skill, isn't it?
I don't know. I don't know that it's just knowledge and skill. I think it's more about the liquidity of the share, and as simple as that, and how risky it is.
But what I meant by that is if you're running a self-managed super fund like myself, and you've got the knowledge and skill out to the top 100, it's easy.
Yep.
I mean, I could even go further out than that, but I just don't.
And you could look at more stocks.
And I could look at more stocks, which I don't necessarily need to do anyway, but concentration is a little bit better. So it's a level of knowledge and skill will determine what section of stocks you look at, because it's about, narrowing your focus to the best stocks for a super fund. So I think, I like this stock. I think it's going up at the moment, so I think it's chosen well.
But see, it depends too on the super fund strategy, if you want growth or whether you want growth and income, isn't it?
Yeah, and correct. So I would be going for top 50, but I do like this stock at the moment. So anyway, we do have another question on the... Sorry, not another question. We do have somebody else on the line. Who have we got on the line? Oh, we don't have anybody online. Sorry, they've gone out from us anyway. But before I get into the next question, if you are listening to this YouTube live stream as a podcast, then we'd love your help. And that means giving us a 5-star rating and writing us a really nice review. Now let's get into the next question, which is from Danushka, who says, "Hi, Dale and Janine. I recently entered the stock market and started investing on some selected companies. Currently in my portfolio, I have the following stocks that are making continuous losses since I entered." She's got Appen, Kogan, and also Fisher and Paykel. Now with Appen and Kogan, looks like the entry price was around $16, and she does not understand the real reason behind the drop of the share price. But looking at the financials, both of these companies have a steady growth over the past few years. Appreciate your thoughts about this. Thank you very much, Danushka. So,
right. An interesting stock choice and a lovely name. Thank you very much for writing in about this one.
Again, we're only picking one stock.
Yeah, Appen we picked, didn't we?
Yes, we picked Appen.
And looking at the chart there, we can see that this has actually been a really popular stock, but it's been trending down for quite a while now.
Well, this is one stock that people keep catching a falling knife for, isn't it?
Yeah, this is a good example of that direction, isn't it? Because if she bought in around that $16 mark, we can see that it was well and truly, just look at the long-term direction, it was well and truly down at the time. And look, sometimes people look at it and they think, oh, it's so much cheaper than it was 12 months ago, therefore I can buy it cheap, and that's often a motivation. I can't believe that some people actually write about that stuff.
Around $7, it's a lot cheaper than 16, isn't it? And 16 was a lot cheaper than 30, and 30 was a lot cheaper than 45.
But it was actually still falling, really, obviously, when she bought it, and it was giving lots of signs that that's the case. Even a simple trend line down there would tell you just to watch out. So,
correct.
Is slowing down though. The angle of that decline is slowing down, which is really nice, and it might actually be bottoming out, but we have no confirmation of that at this stage.
No, we don't have that, and I think it just shows, if she's buying stocks that have fallen away, she's probably fallen into that trap of picking stocks too early, and maybe look at the process, because a lot of people pick stocks based on the price that they are, and we don't look at the price. In terms of, we don't just go and filter the market and go, we're looking for everything that's around $1. We don't do that sort of stuff. We look at stocks within a watch list. Yeah. Which is like we're talking about with, when I'm looking for stuff for my self-managed super fund, I bring up the top 50 stocks. Yep. That's all I look at. I don't go outside of that. And unless something really catches my eye when I'm looking at other things, but generally the top 50, I narrow my focus, look at what's going up, what I want to buy, and then buy that. Yep. Whereas all too often people look at a stock and go, wow, that's cheap. So then they make their decision and they say go for a few weeks and then buy that stock, which is wrong because they're not getting the direction.
Well, you can't blame people for going for stocks like tech stocks because they were so talked about. And people think, oh, well, this is a really good company, so why is it falling? Maybe I can buy it now and I get it cheaper and it'll go up because people have sold it off so heavily.
Can something always get cheaper?
It can, absolutely, and this is an example of that.
This is an example of that, so it's way too early for Appen at the moment, so I just put my stop loss on it and make sure I stick to those stop losses. But thank you for your email. Now we do have another email, and this one's from Paul, who says, "Hi Janine and Dale, hope you're well. As you know, I'm a recent graduate of the diploma, and so I put a decent amount of analysis into this one. Just hoping to hear your thoughts on it. Really, I bought into Karoon Energy in early January 2022 for $1.90. What did you say? $1.98. When it confirmed it continued its uptrend. I'm intending on holding this for the medium term, using the trend line as a trailing stop loss. I have an initial price target of around $2.60. Now, keen for your thoughts. Please let me know. Thanks, Paul." So Paul, I think Paul graduated about 3 months ago, I think,
Okay.
roughly.
Look, just as far as the trend goes on this stock, just looking at it, history doesn't tell you that it's a good trending stock.
No, it doesn't.
It's rarely volatile and potentially quite high risk. But over this period since COVID, the trend appears to have changed. And it's actually it's changing personality, you might say. Now, some stocks can trend beautifully for years, like the case of CSL that we saw, and then change personality and trade sideways for a while. But people think that it's the same stock, but it's changed.
Yes.
So this stock may have changed with the trend moving up. I think, there's nothing wrong with where the purchase was. It's
It's definitely in an uptrend. It's definitely in a longer term uptrend. So he's picked those two correctly. He's picked a good entry point. He's got a price target.
There'd be a trend line underneath.
There'd be a trend line underneath.
His risk would be small if it then pulled back because of that.
Yeah, it's smart. I like what he's done. I think it's pretty good. And as he said, he's got a price target, but he may not sell on that price target. He's just got I know that he's comfortable. It's probably going to go to that level.
Yeah. I mean, look, you can see here, even on the monthly chart, the direction was strongly up. That doesn't mean it might not turn. Just because direction is strongly up doesn't mean the stock's not going to turn around, though.
That's correct, but he'd be ready for that anyway.
And that's the point, isn't it? So
Correct. Yeah,
getting the direction right is only one part of it. It's then about managing your risk from there.
Oh, look, it is. And we get people all the time. We had somebody only on the YouTube comment section, with the video that said, 8,200 that you did yesterday, which you did an absolutely amazing job on, by the way.
Oh, thank you.
In standing in for me while I was playing in Gillham. So yes, go and watch it if you didn't see Janine. It's great. She did a really, really good job. But somebody said, because we said 8,200, that was a prediction, and they're basically telling us we're dreaming.
Actually, one of the guys was just asking, did you go and play for the Cats? Isn't that? But I don't want to sound too rude, but because we've known each other for so long, so I can get away with saying this. But wouldn't that be the geriatric game? You know how the oldies play?
What are you talking
I've seen them play.
Hey, look,
I think you'd be awesome.
You're an Essendon fan, right? You're an Essendon fan.
Oh, look, don't
Because
talk to me about that.
Because of your
On the
husband.
weekend, yes.
Well, the team that I played for in Geelong was in Essendon colours. How's that?
Wow.
Even though I'm a Cats fan. So I grew up playing in Bombers colours
How come you didn't become a bomber?
because I was a Geelong fan.
Because you lived in Geelong.
Because I lived in Geelong. But getting back to Karoon Energy and what we're talking about here is basically he's predicting the future, and which is really, really possible if he can do it. But he's got rules in case that future doesn't happen. That's really what we're talking about.
Okay, fantastic.
You're okay now?
I'm happy.
You want to say any more?
No, I'm trying
Okay.
to stop laughing.
You're trying to embarrass me all the time. That's what you're
Yep.
trying to do. Cool. All right. Well, that's our thoughts on Karoon Energy. Now, if you've enjoyed tonight's show, give us a big thumbs up. That means click the like button underneath the video to let Janine and I, or myself, know that you've really enjoyed the show.
If you called into the show and missed out on us answering your question, then watch our show next Tuesday between 7 and 8 p.m, as we'd love to chat with you. If you're not able to watch live, you can also email your question ahead of the show. You can do this by sending your email to info@wealthwithin.com.au, and remember to include Wealth Within Live in the subject line.
Also, we'd really appreciate your support for what we share each and every week. You can show your support by subscribing to our channel. So if you have not done so yet, hit that subscribe button now. Also, forward our video off, share it, run to your friends.
I was trying to take your line then. Well, that is it for tonight's show. We do hope you enjoyed what we presented tonight. We've so enjoyed receiving all of your emails and thank those who called into the show. We love the opportunity to chat with you personally.
As always, thank you for joining us tonight, and we hope you have a great week. For now, goodbye, good luck, and good trading.
Bye for now.